really, you see a lot of it's easy to get caught up in YouTube channels or Twitter or whatever. And when you step back, has anything really happened? I mean, Bitcoin's barely consolidated, barely. And people, because everybody's hopes and dreams are in this trade, right? This is I call it the greatest macro opportunity of all time, or greatest macro trade of all time. But also, most of us have most of our wealth in this trade. So it matters. So people are going to be incredibly emotional about this, because if we get through the other side and you do the right things and you don't fuck it up, you can make a lot of money. And so they think about their future self, and they're terrified of not getting there. I get it. It's just stick with the program and just be careful and just be patient.
Raoul Pal highlights that liquidity cycles, which are fueled by central bank policies, debt levels, and worldwide economic patterns, have a significant impact on financial markets. Significant changes in asset values, particularly for riskier assets like cryptocurrencies, are frequently correlated with these cycles. Raoul claims that central banks' attempts to stabilize economies in the face of growing debt pressures are the main reason behind the significant liquidity expansion that is currently underway. The rapidity of cryptocurrency adoption is what makes this cycle unique. Pal thinks that cryptocurrency markets are poised for rapid expansion due to expanding institutional participation, the emergence of tokenized assets, and a strengthening correlation between the Fed's balance sheet and the pricing of digital assets. According to him, this tsunami of liquidity may propel the cryptocurrency bull market farther than most anticipate, maybe lasting well beyond 2026. If that turns out to be the case, investors might need to reconsider their plans and get ready for a protracted era of asset growth, particularly in the digital sector. Please remember to like this video, subscribe to our channel, and enable post notifications if you have a strong interest in learning about the future of finance and the function of digital assets like Bitcoin. This will ensure that you never miss anything. Thank you, and enjoy the video.
Obviously, we've seen the performance so far. You look at the looming shutdown coming up here in March. Is this something that we should be worried about in the crypto market, or is this kind of a non-starter?
It's a non-starter because, as we all know, the US has trillions upon trillions of debt to roll over, as do the Chinese, as do the Japanese, as do the Europeans, as do the British, as do the Canadians, and they're going to have to bring rates lower and increase liquidity to do it.
Right.
And everybody knows liquidity is actually the largest driver of asset prices. So if we have a government shutdown, we will use what's known as the Treasury General Account, which is the US government checking account, and we will drain that. Now there's $800 billion in that, so that's plenty of liquidity to start with. And then if they run out of that, there's plenty of other forms of liquidity. So I think that over time, yes, Elon is trying to stall payments. They've laid people off, they put people on freezes, all of this stuff. So you'll have less deficit spending. Okay, great. But we still have all the existing debt to roll. Sure. So what we have to do is roll that. So the liquidity has to come. So it's a good thing to do what they're trying to do. We can argue all day whether they're doing it in the right way and to the right things and whatever. Yeah. But generally speaking, to be braver in how you lower government spending when you've got this much debt is an intelligent thing to do. I don't believe there's a debt crisis that comes. I just believe it just gets monetized. And so as opposed to a whole debt blow up where everything goes down 90%, we go from a debasement of money of 8% a year to a debasement of 12 or 14% a year. And that's pretty ugly. When I speak to institutions, both from the investment side or those that want to build on blockchain rails, this clarity is desperately needed. Desperately needed. Now they kind of are moving forwards because they know it will be pretty liberal now going forwards in how we can use this technology, but it's still not easy enough for corporations to do this with ease. So look, it's a very big deal. It will bring in much larger check sizes from much larger players over time. So yes, for this cycle. In terms of cycles, unless the US government manages to pay off all its debt in one go, we're in this cycle. It's been the same repeating 4-year cycle. It's driven by the debt refinance cycle. It's a global cycle. There is no way around that because of the aging population and the debts that we have. So the only thing is, will this cycle morph it somewhat? Of course, they all do. Like the last cycle peaked really early. Why? Because the business cycle peaked early. In March 2021, the business cycle and liquidity peaked. When we go to 2017, liquidity in the business cycle peaked right at the back end of the year, and then it had a blow off top. 2013 was similar. So the last time around was actually the abnormality, and there's always going to be an abnormality. So what is the one most likely to happen this time? Well, if the crypto markets and liquidity peak when the business cycle peaks, and we'll use the ISM survey, the Institute Supply Managers survey, as our proxy for that, we've only just bottomed and we're breaking 50 to the upside. And that's going to take several months or a year or so to get there. So probabilistically speaking, it might push it into 2026. So that's something we'd have to get our heads around, is actually it goes a bit longer than we imagined. So that's what I'm thinking about this cycle. Then we've got to think, okay, is the downside going to be the same? Because we've got new players, we've got ETFs, we've got different stuff. People could have put Bitcoin in their 401k. And I would argue we probably have less downside. Bitcoin's downside has been less each cycle. So maybe it's down 50 or down 45 this cycle, versus NASDAQ would be down 20, let's say. That would make sense. Now, a whole bunch of everything else will go down 99% or 95%. But what we'll see is the majors going down less than previous cycles. I think that's my most likely outcome. And so it can catch people off guard, because if people are waiting for the bottom of a cycle in 2026 and it's more of a sloppy sideways range and everyone's expecting it to go lower, you can end up having this whole mess where you're very bullish but you don't own anything. So I think let's see how it plays out. But I think it'll always be different. I'm just trying to figure out where it's going to be different. It's definitely not going to be a short cycle, because we've only just started the liquidity cycle. We've only just started the business cycle. So it won't be short. Will it be towards the back end of the year, which would be normal? Or could it be back into 2026? And then what does 26 look like? Maybe less frantic than the last cycle, which we saw a lot of collapses and a lot of things going horribly wrong.
According to Raoul Pal, blockchain technology will serve as the cornerstone of the international financial system in the future. Blockchain can revolutionize finance by tokenizing physical assets, facilitating immediate transactions, and offering safe, immutable records. Ethereum has established an extensive ecosystem of decentralized applications, while Bitcoin is excellent at managing high-value transactions. Both of these platforms have already demonstrated the promise of decentralized networks. With their continued expansion, Pal thinks these networks will be crucial in changing global value flows in financial markets. Also, a quick reminder, only a small percentage of viewers are subscribed. If you enjoy deep dives into crypto and finance, hit that like button and subscribe. It's free and helps the channel grow. Now let's get back and hear what he has to say.
But you've got to remember how money works in the economy. Right now, there's all of these pension plans and all of these private equity funds and all these VC funds. They've had no exits. Nothing has gone public. Things like Stripe, still not public. In the crypto land, Circle, still not public. Kraken, still not public. So that we need to see the capital markets open. We need to see money get recycled, and then money can move through the system. So that's one of the issues. So a lot of the crypto-based investments is from the crypto market that releases as the capital goes higher. But at the traditional investors, there's still not enough money. So we're having to bring in new capital, and that might be the Middle East or a couple of others. But we're not getting the traditional investors fully involved. They just don't have money right now. And that's a function of what I talk about when I talk about the business cycle. The business cycle, if you think about it, when the business cycle is expanding, it means people have more earnings, whether it's at household levels or corporation levels. Those profits and earnings get recycled into investments. And that's what drives a lot of this. So we're still at this point where we don't have everything in place to have a massive institutional involvement, but we are definitely seeing signs of it. Once we get the regulatory clarity as well, just a basic guideline, it'll accelerate further. So I only see acceleration ahead, but it just takes time. Really, you see a lot of it's easy to get caught up in YouTube channels or Twitter or whatever. And when you step back, has anything really happened? I mean, Bitcoin's barely consolidated, barely. And people, because everybody's hopes and dreams are in this trade, right? This is I call it the greatest macro opportunity of all time, or greatest macro trade of all time. But also, most of us have most of our wealth in this trade. So it matters. So people are going to be incredibly emotional about this, because if we get through the other side and you do the right things and you don't fuck it up, you can make a lot of money. And so they think about their future self, and they're terrified of not getting there. I get it. It's just stick with the program and just be careful and just be patient. I think the difficult thing is most of these people are not us. So these are younger people with no chance of buying a property, who are seeing nothing but sort of a bleak financial future for themselves. So it's become this kind of financial nihilism. Or to put it in a more positive term, it's a more speculative economy because there are opportunities there and they need the opportunities to leverage. So they will always keep looking for the 50x, even though however often we tell them, listen, there's no such thing as consistent 50x returns. Really, if you're owning Bitcoin, Ethereum, Solana, Sui, whatever, you'll do fine. But that's not good enough for them. To have another 5 or 10x from there is not good enough for them. So they are looking for something. But I think you're right. The sense is that they will stop looking under this particular pile. Yes, they might find memes, whether it's Pepe or whether it's Doge or whatever, that survives and does well. But I'm not entirely convinced that meme coins will be the great attraction any longer. How we create network value is either by number of active users, or it's also the total value transacted on a particular chain. That combination explains the value of these networks. So Bitcoin has big size transactions and a lot of users, which is why it's the most valuable. ETH has smaller size but lots of users, and it all flows from that. So real world assets outside of stablecoins tend to be larger single transactions. If you're going to take a slice of a bond, or credit or something like that, it tends to be you stick in $100 million because you're a financial institution, and you don't do any more than that. So it's a high value, but only one or a few nodes in the network are using it. So yes, they're good, but they're not everything. So they add value. Gaming, on the other hand, much smaller values, gigantic volume size. So there is a balance between all of this. Now, over time, we will see the entire financial system go onto blockchain rails anyway. So it's not just the tokenization of real world assets, more so the hyper efficiency of putting equities, all bonds, everything on chain as an instant settlement system, proof of ownership, custody. You get rid of so many middlemen. So that's coming, and those markets are trillions upon trillions of dollars. So yeah, it is important. Gaming's important from another perspective because that's one of the large communities of Web 2. Social media being one, gaming being another, music being another, sports being another, that will eventually migrate across to this world. And all of those come with like 1 billion users plus. I mean, a big game can have 1 billion users. A big pop star has 1 billion fans. A big sports team has 1 billion fans. So these are very big things.
In his closing remarks, Raoul Pal offers a compelling analysis of the emotional roller coaster associated with cryptocurrency investing, particularly given the large number of people who have linked it to their financial dreams. He admits that it's simple to become distracted by the regular market updates, YouTube, and Twitter, and lose sight of the wider picture. He reminds us that the long-term opportunity remains intact despite the price volatility and stagnation of Bitcoin. He refers to this as the greatest macro opportunity of all time, but he also acknowledges the tremendous emotional strain that investors experience, particularly when a sizable amount of their capital is at stake. Raoul stresses patience and following the plan, yet anxiety is caused by the dread of missing out or making a mistake. Raoul draws attention to a generational gap as well. Many younger investors believe that cryptocurrency is their only chance to achieve financial independence, since they are priced out of more conventional wealth-building opportunities like real estate. People are pursuing irrational 50 times returns as a result of this, which has encouraged a speculative mindset. Raoul cautions against continuously searching for the next meme currency windfall because steady, enormous profits are uncommon, even though he thinks assets like Bitcoin, Ethereum, and Solana provide strong long-term growth. Raoul thinks that the immutable nature of blockchain technology will eventually replace the current opaque and bureaucratic systems with a more transparent and reliable one. Although there may be short-term noise and market volatility, the long-term picture is still very optimistic, with blockchain changing social media, gaming, finance, and more. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.